Basically, the most of the event-driven risk is skewed towards the end of the week. Not seeing much towards in the beginning of the week, but having said that, we do have a few, I'd say, juicy technical structures that I'm going to be looking at very closely come Monday morning and maybe even Tuesday if they haven't broken by then. But we'll take a look at that after we've gone through some of these event-driven risks on the panel. So looking over at what we actually have. So for Monday, we're looking predominantly at the Chinese GDP, Q on Q. Obviously, China's been very much in focus in the last few months, so do pay attention to the GDP read out of China. You know, anything that is below 7% is always going to be in focus. And that's just been a figure that the market's kind of gotten used to. Growth above 7%, anything that's coming in below 7%, the market tends to pay attention to as, you know, potential slowdowns take hold. We also have the ECB's Novotny and the Fed's Lacker speaking on Monday. I've put in about a medium relevance. I would have put a little bit less risk allocation. I probably would have put around a 15% risk allocation. But having said that, since we have some nice technical structures that I'm going to go through in a little bit in the Bund, especially the Bund futures, I've put myself a little bit more risk allocation because of that. Looking over at Tuesday, we've got German PPIs, U.S. housing starts, building permits, and then from a central bank policy perspective, we've got the Fed's Dudley and the RBA meeting minutes. So nothing really particularly apart from maybe the minutes and possibly something out of Dudley. I don't really trade the German PPIs per se. Housing starts and building permits can be volatile if they're really big misses or beats, but overall I've put quite a low relevance in comparison, relative comparison to the rest of the week, and given myself about 15% risk allocation for that day. Looking over at Wednesday, really the only event-driven risk that's on the board is the Bank of Canada rate decision. I don't particularly focus too much on the Bank of Canada. I will be trading it, but again, you know, do your prep and be prepared for anything. We have had recently some dollar weakness, so if you're trading the CAD, do bear that in mind. As a backdrop, there's been quite a bit of dollar weakness across the board over the last few weeks, or a couple of weeks, I should say. So just do bear that in mind when trading it, if you do want to go long or short into those scenarios. I'm not going to go through this into any particular depth. I'll leave that potentially either to Brannigan or someone else to do a bit of a rundown on that. Thursday, we've got the UK retail sales, and the main event of the week is the ECB rate decision and basically the press conference, because we wouldn't really be expecting anything out of the rates, even though there could be a possibility of them doing something with rates. There's been some small speculation that they could do something with the depot cut, or the depot rate. The ECB has said that they've reached the lower bound. However, do pay attention to it if they do want to kind of put a cap on any sort of euro strength. Recently, we've been seeing some euro USD strength. They don't want the euro to move higher. It's just going to import more deflation. So, you know, from that standpoint, maybe they might look at doing something. I don't particularly see it happening, but do pay attention to that. From another perspective, you know, if they're going to say something particular to do with expanding their balance sheet even further, it's probably going to come in the form, if they want to make it official, it's going to come in the form of the statement. So do be really keyed in to how they speak and their rhetoric in the statement. Obviously, anything that they've already said, you know, don't take too much notice on it. If they've said, you know, they're willing to use all unconventional instruments, that's stuff they've been saying for months, if not a whole year by now. So don't pay too much credence on that. But then again, if they do actually say something that's definitive, they're willing to that they're going to expand their balance sheet, or that they might look to expand their balance sheet in the coming year, or anything that's particularly dovish like that, do bear that in mind. Obviously, then again, there's also the aspect of expanding the program overall. They could obviously either just increase the purchases per month, which you know, if they just expand it just on a month-by-month basis, that have different repercussions to, let's say, the bond curve than if they just expanded the actual program past September 2016, which is really when they said they were looking to push that into. They have said they'll push it further than that, but they can push it further than that, but they haven't actually said precisely that they would. So if they do say that, you know, predominantly I'd say you'd probably look to buy equities as the surer trade. On the bond space, it's a little bit of a tricky one. Last time we saw them announce QE, we saw a really sharp rally up, but do bear in mind now, there could be a bit of a different environment now with the Fed feeling a little bit more dovish than they should be. They're not really looking at hiking rates. It seems this year, from what we're looking at right now, it could be a scenario if they do something, the bonds, the longer end of the bonds actually start selling off. Maybe they blip up initially, they do a knee-jerk reaction up, and then eventually sometime during the day start selling off. The 30-year, maybe even the Bund starts selling off, just because the bonds start actually pricing in a little bit more reflation. Just bear that in mind. It could be a bit of a scenario, a bit of a play that I'm going to be looking at, and potentially some other institutions in the market might be looking at. So I said a little bit of a gray area there. I'd say if they do sound particularly more dovish, you're probably better off trading the equities and the euro on that, but I'm not going to go through any more in depth than that. Other than that, we've got the European Consumer Confidence, U.S. Leading Index, existing home sales, and the ECB monthly report. I've put myself basically a high relevance. That's the only high relevance for the week. 30% risk allocation. Predominantly, or most of that's going to go into the ECB. Friday, we've got the German and European PMIs in services and manufacturing. These are all preliminary numbers, so they're going to be a lot more important than the final numbers. Do stay tuned for any these numbers. They're generally quite early in the morning, between 7:50, 8 o'clock until around 8:30, 9 o'clock. They come out, most of these figures. So by 9:30, we'll have all these figures out already. Do pay attention to them. U.S. PMI manufacturing, not as volatile as the European ones. In fact, I'd never trade this number, but do just keep it in mind. It could be something. If it's particularly big or we have a particularly big miss, maybe the Fed might actually look at it. I've actually put this in bold. ECB survey professional forecasters. Now, traditionally, the ECB have said that their measure of inflation expectations, they basically take it off. One is the ECB survey professional forecasters, and two is the EU 5-year. So the European 5-year swaps. So they do look at both of these things. They always mention this, and the market does stay very well tuned. I'm not quite sure if the market's as tuned into this. Do pay attention to it, because if they all of a sudden start saying that they see inflation expectations rising a lot more than what the market's saying, is it something the ECB is going to be paying attention to? Maybe that'll affect their decisions in the future. Just bear it in mind, and just stay tuned to it. Overall in the day, though, I've put low relevance, even though I think it's probably low to medium. I wouldn't say low. It's not as low as, let's say, Tuesday, but I've put myself a 20% risk allocation because of predominantly these numbers in the morning. Right, let's take a quick look over at some of the structures in the market, and I think you'll find that they look particularly interesting. If we take a look just first of all at the Euro stocks, and if we just take a look at the dailies, you'll see that the market, ever since we sold off, it seems as if we're very much in this this area right here. This is our range. This is our box price range, our price base. So we've been basically using this whole area, and if we drag this over to the side, you'll find that basically perfectly matches this whole area that we were in before. This whole value area that we were in before matches what we are in now. So using that information, we can basically say, okay, well, if we want to leave this value area, we want to leave this value zone, it's very clear to us that this high, or at least these highs together with this high in here, which comes in at 3327, going back, you can see 3327 is these really important highs just nestled in here, right in there. Really quite important. So do bear in mind, that's a really nice little area to the upside. It could still hold as resistance. Ultimately, I would still play it as resistance up until it does break. But it's just an interesting area because it really is the area that's defining this whole region in here. Is an area that we've probably done quite a little, very little volume. It's a low volume area. Now, whether the market actually wants to come in and fill in some volume and actually trade it out, we'll see, and we'll make that judgment when it actually starts trading in that region. But up until then, I think still use this area as a pretty key little pivot. If we fail in this area, there's nothing stopping us from rotating back into this region in here. For the time being, we've closed very, very strong on the week. I don't see why we shouldn't potentially test initially these areas. So just do bear that in mind, bar any sort of big fundamental news or anything potentially big, for example, in China that might actually move the market overnight. But that's currently the structure that we're looking at in the Eurostoxx, which is the main area I wanted to point out. If we look over at the profile, obviously last week I was doing this on Delta. I personally like the weekly profiles a little bit better on Delta. In fact, overall I like the market profile on Market Delta a little bit better, but I'd say that for actual levels, specific and intricate levels in the market, I'd say CQG is a lot better to look at just because it's an industry-wide used tool for the bigger institutions. But if we look over at the profile, there are some obviously key levels that we can take from here. So obviously the close of last week we've got at 32.67 with the high of last week at 32.69. We've got the value area high of last week at 32.62. So obviously if we open in and around this region, do bear in mind this zone of value areas. If we come and open, let's say, in this region in here and make our way down, and we can hold a bid in this area, that is going to give you an indication that we're trying to seek new value to the upside. So do bear in mind this is going to be your initial area for a decision point. So I'm just going to be keeping that area, very close, keeping a very close eye on that area initially in the week. Moving on a little bit lower, we've got the VPOC of the week here at 32.30. The value area lows, if we can just pull that up a little bit over here, you can see at 32.06, that level in here. And then if we move just a little bit lower, move down to some of these more crucial areas, obviously the value area lows of the previous week at 31.96. And the crucial areas, if we look back, was these highs at 32, I believe was about 31.89. This area is 32.89, I believe, or 88. And then this buying tail from last week in here, which is basically the last time we saw the passive buyer step into the market between 31.76 and 31.71. Now obviously, from a trading perspective, it's really going to depend on how we trade initially in the week to get that kind of notion of the actual sentiment in the market. If we cannot hold a bid above here and we start breaking below, I'd say I'd probably be looking for this market to make its way and test this VPOC from last week. Again, that's going to be an important pivot. If we can hold that, maybe potentially we can trickle our way back up. If we cannot, in those scenarios, we break through that, and then we're testing lower to the value area lows of last week. So it really does depend, I think, initially on how we react around this value area before we start making a decision. So do bear in mind and keep an eye on how we react around that level. And to the upside, obviously, the key areas that I mentioned before on the dailies. Now let's move over to the more interesting structurally of the markets that I'm looking at is the Bund. The Bund futures, I feel as if we've had such a tight consolidation, such a tight coiling range that it's ready to move, and I think it could be moving quite quickly. Maybe not this week, but if it does move this week, I think it's very important that we're all prepared for it, because it's currently setting up potentially for a decent little move. So let's just take a look at the metrics now. We've got the high from 2 weeks ago, which comes in here at 157.67. We have the, I think I just pulled that off, but if we just pull that in again, 157.50 23 in here, as you can see, that is inside week 1 high. That's the inside week high of the first week. Then the second inside week high comes in at 157.12. So 157.12 is inside week high 2. So we've got two inside week highs very, very close to each other. And then the really key pivot area that I think is going to give us a clue as to whether we actually want to offer down. We have this really, really important high that we made back in August at 156, I think it's about 71, 72. If we just move it, you'll see. Yeah, it's 72, but I've kept it in at 69s only because that's the inside day. That's the inside day low of Friday. So the ID low at 156.69. We've got these important highs there at 156.72. This is 76. This is around 71. And then this is around 66s, I think. 66s. So we've got 69 here, 66 is here. So, I mean, overall, this whole pivot area within this 10 tick range is super, super crucial in the short term to see if we're going to make our way to the downside and potentially test the inside week lows. Now, the inside week lows, we've got inside week low 2, which is at 155.83, and inside week low number 1, which is at 155.74. So again, crucial area in here, crucial area up here. So we're in an area, we're in a region in which to the upside and to the downside there's some really crucial pivot points. If you can pay attention to your price ladder, pay attention to the price action in and around these regions. I mean, there's 100 different scenarios that I can draw out for you, but just to name a few. Early onset, if we can't hold a bid and we actually break below here, and we're using this area as resistance, I'd say, this region is probably gonna, there's very little holding it back from making a move all the way down to this really key pivot area. So I'd say if we can hold the offer and break below that inside day low at 156.69, honestly speaking, I don't see there's much holding it back for a really decent move to the downside. There is this trend line, as you can see, that I've drawn in here. That's a really bad drawing that I just did there. But in any case, that is coming in around here. I wouldn't say it's the best support. It is support, but I wouldn't be looking for it to hold. If anything, if I'm short, I'd be looking to scale here. And if we break, we break. But I might scale a few just on the break of that through there. But really, I'd be looking for it to test all the way down to this really key pivot area. If we can take this area out, then we're really opening up some really good downside, because this area has been holding for the better part of about 2-3 weeks now, and there's been a really strong buyer every time we get into this region. If we can take this area out, I really do think there's going to be some serious moves down, because that's essentially, again, another failure. We keep having these failures here, failure here. If we fail again here and get back below, I think that's that could open up again a move right back into this larger value area that we've been in for a very, very long time. That's a downside scenario. Obviously, there's an upside scenario where maybe we, let's say, false break an inside day to the downside, or maybe not even break it at all, hold above, and then start making a move, take that upside in here, and then on the break of that, basically take, once we take this inside week, these inside week highs out, I think, very easily, let me just make that a little clearer, once we take out these areas here, I think very easily we'll test this high at 157.67. There's really not much holding us back. This is a very low volume wick. We did that on the non-farm payrolls. I mean, not low volume, but there's not very much traded there. It was basically one big move to the upside, and then we kind of trickled down on the non-farm payrolls. I'd say an exhaustion point. It's a very big exhaustion area. So I think there's not really much holding us back for a move back up there if we get through there. So on both sides, great scenarios, great setups. Do stay tuned and be very, attentive, because it was very slow last week. Just bear that in mind. It was very slow price action. But if there's a big buyer or seller that steps into the market with such low liquidity, it could drive it 20 to 30 ticks really quickly. So just be very attentive. Be at your desk at all times, and hopefully we'll get some decent moves. All right, thank you guys very much for listening. Good luck for the rest of the week. I'll be doing, again, another price ladder analysis video on Tuesday. If any of you guys are around on Friday, I won't be doing the weekly market wrap, but instead I'm going to be presenting at the London Investor Show. So do check that out. I'll probably tweet something out, or if you text live, I'll tweet something out. So do keep in touch, and ask me any questions on my Twitter handle at MVS_FuTextLive. Anyway, yeah, good luck, happy trading, and we'll speak soon. Take care, bye bye.